Hi all, this is Athreya and analyst at PMS Bazaar. So welcome you all for the new episode, which is episode 7 of Alternate Universe. So along with me, I have the guest for the day who's going to talk about the successful strategies for wealth and the wealthy. So without any delay, let me introduce the guest of the day, who's Mr. Anupam Guha, Head Private Equity Management. Mr. Anupam Guha is with ICICI Securities Limited as Executive Vice President, heading the Private Wealth Management and Equity Advisory Group. He has been with ICICI Group for past 19 years across retail, institutional, and private banking business, which also includes over a decade in private banking business, both in India and overseas. He's one of the founding members that helped to set up the private wealth management business at ICICI Securities. Mr. Vikaas M. Sachdeva, MD, Sundaram Alternates. Mr. Vikaas M. Sachdeva is an industry star with over 3 decades of experience in asset management business. He currently is managing director of Sundaram Alternates, and he's on new face to us. So moving on to the next person of the day is Mr. Karthik Athreya, Director Head Strategy Alternative Credit at Sundaram Alternates. Mr. Karthik Athreya is a financial service professional with over 2 decades of experience across the financial services industry. He's currently the director and head of strategy for alternative credit at Sundaram Alternates, leading a team with managed assets over $170 million across real estate and private credit. So over to you, Mr. Vikaas, sir.
Thank you, Akshara. Welcome, Anupam.
Thanks,
Karthik.
Vikaas. Thank you for having me.
So, as is the way we do things, it's indeed my pleasure to actually introduce you as a person behind the professional. We've been doing some legwork, some deep investigative work, if you will, and I found a few interesting things about you. And if it's okay, I'll just share with the audience what we found about you. To start with, I think running is your passion. It's not just a passion; it's who you are. You're an avid marathoner. In fact, I run myself. But what was amazing to find is that you actually did your first half marathon in 2017, right?
That's right. Yeah.
And then after that, you did a full marathon in 2018. Most people would be content with that. You actually moved to completing the Comrades Marathon in 2019 in South Africa, which is 89 kilometers. Okay. I think Karthik and I probably together we will not be able to complete 89 kilometers in the next 3 months. That's amazing. And not just once, you've run it twice. You've done it again this year. You're
Thank
an
you.
avid
Thanks.
reader. My pleasure. You're an avid reader and you're a workaholic in general. In fact, your running actually runs your whole, pun intended, your whole life. There's a strict dietary regimen which you follow, again driven by running. In fact, very interestingly, I found out that you relish fish not just because you're a bong, but because it's a very high concentrated source of protein. I think that is sacrilege, but that is what it is. You're a Sagittarian born on December 5th. You're a dyed-in-the-wool Sagittarian. You have a very high zest for life, is what your colleagues vouch for. In fact, talking about colleagues, I think one of the things they're both appreciative and intimidated is your grip on numbers and your data-driven perspective. I've been told that you are one of the few people who can spot a wrong number on a spreadsheet or a presentation from far off. Okay, that's what intimidates them, by the way. What they're appreciative about is they vouch for your great leadership and management skills, people management skills. You're an ICICI lifer. This bank was your first job. Most people tend to stick around with you, not just because it's ICICI Bank, but also because you're a great leader. One of the
Thank
things
you.
which comes across very acutely every time I talk to your team is that you have a bifocal business acumen. You can actually look at a business or a particular issue from a 50,000 feet perspective and then zoom in to 500 feet, just be at the trenches, digging at the trenches along with your fellow soldiers. And I think that gives a lot of, that enables you to get a lot of respect and admiration from your colleagues. People say that they've seldom found it in leaders whom they discuss. And I think that's a very big compliment. Not just that, I think your networking and relationship management skills are legendary within the ICICI Group. You manage to not only take care of clients, and you've been around for 24, 25 years, you're managing clients, you not only manage to take them along with you, but you also manage to collaborate internally with colleagues across levels to get your work done. You get work done is what I believe. This is the phrase which comes through. Running has brought a lot of gravitas to your life. You're far more patient, okay, than what you were. Uh, I was asking about what you like to wear. Well, people have never seen you with a tie. Okay, your dress code is usually formal, but you're never seen with a tie. You're very actively involved in community events, be it Durga Puja, Ganesh Utsav. You're leading from the front. And what people actually grudge you for is not only are you involved with that event, but you're also able to keep a grip on the business. They say, why can't you just take a break? At a personal level, you're very close to your family. You travel quite a bit. You love instrumental music quite a bit. In fact, I think creativity runs in your family. Your wife, Piali, she's an accomplished artist. She paints, she sings, she plays the sitar. And I think that streak of creativity is also in your daughter, Ananya, who's 19. She sings pretty well as well. She sings classical. But your son, Aniket, who's 15, has taken after you in a lot of ways in terms of sports and outdoor activities. I believe
That's
just
right.
recently in the Tata Marathon, he ran with a visually impaired person. He ran as his buddy. Uh,
Yeah, that's
I
right.
think that was very touching and very inspiring for a lot of children his age. Uh, you come from an army background. I think people who know you a little bit would immediately vouch for that. You know, you're zest for life, your outgoing nature, and because both your dad and brother are from the army, and you've traveled across the country, you've lived out of a suitcase, as they say, you know, throughout your life. Uh, one last thing, amongst the last thing, as intense as you are about your work, your friends actually vouch for your deliciously wacky sense of humor. You know, I'm sure your colleagues will be amazed to hear that you have a very deliciously wacky side of life as well. Uh, what irks you is lack of effort. You know, when people don't complete things on time and they commit. In fact, you're far more forgiving if there's an honest attempt rather than an excuse at the last moment. Uh, you had a great year last year. I think revenue for your company, ICICI Securities, for the last fiscal was close to 1,000 crores, or did
For
it
the
cross
wealth,
1,000 crores?
for the
Sorry,
wealth business,
for
for
the
the
wealth
wealth
business, for the
business.
wealth business, for the wealth business.
Yeah,
You topped off an AUM of 3.4 trillion across 80,000 customers. That's on an average 4 crore per customer.
that's right.
That's
Yeah.
that's that's quite amazing. And in the spirit of what I just did, hereby I close the marathon introduction which I just had. Okay.
No, so thank you so much, Vikaas. I mean, one for such a kind and sweet introduction, I would say, and also for having me, on this platform, really speaking to our audience today. Yeah. So thank you so much.
We've had over 500 registrations of people wanting to listen to you, and I think they're going to have a great
Fantastic.
time. I've spoken briefly to you and about you. I think this is going to be a great session. So let me just dive straight in. Uh, I talked to you about your running, and I talked to you about your business as well. Now let me just ask you a question straight off the bat. Uh, how has running helped you in terms of your business? Has it helped you in terms of taking decisions? Has it helped you in terms of thinking long term? You know, I talk to a lot of runners who run businesses very successfully. I'm very keen to understand how running has helped you run your business.
Yeah. So, great question upfront, I would say, Vikas. Running for sure has made me a better person, a better professional. And I would only say that, running long distances, 20 kilometer, 40, 50, 100, is not normal. It's out of the ordinary, which essentially means that it's actually challenging conventional norms. And, it's a path which is less taken, less trodden. And in that context, I would say the starting point when somebody asked me that, hey, listen, do you really want to get into marathon running? Was that was a sense of disbelief initially, and then really to kind of traverse this journey. I would only say that taking on a challenge, right, and challenging the status quo was the first tipping point. But what I realized very soon was that saying is easier than done. Taking on an ambitious target or a number was the starting point, but one really had to then plan well. And more than the planning bit, I would say execute. And for execution, you really need to be disciplined. You had to work hard. You really had to, on the path, really create smaller milestones for you to really chase, go after, modify your plan, because as you move ahead, and as you know, and I would always say that marathon is a metaphor for life in general. So you kind of figure out that not all your plans are working. You need to move into a plan A, plan B, adapt, adjust, relearn. Also, what I also realize is that you need to create an ecosystem for you to succeed, right? You cannot, while marathon is a solo game, but really behind that solo game is really a network effect, I would say. And you kind of work with a lot of people, right from your diet plan to your strengthening partner, etc., and the team of people that you run with, and you learn from each other. So that network effect really helped me, and eventually I think having kind of spoken about all of this, it was about running with passion, running with pride. And once you start achieving your milestones, you started believing in the process. I think it's very important. And if you were to put all of this in context of our professional careers, right, it just resonates so much. And that is why you see so many folks from the corporate world really embracing the sport, because it resonates so much to corporate life. And lastly, for all the belief that you have to back yourself. And I think that's my single biggest learning, that self-belief, believing in your own ability. If you don't believe yourself, the world is not going to believe you. And once you start doing that time and again, I think, and be patient, results will come. As they say, control the controllables and really focus on the process, be disciplined, work hard, and you will all be surprised by the outcomes that come in. And in fact, my next, as I say, these are all adventures for me. And my next adventure that I'm hoping to do is really to go to a place called Sachdeva, which is in Ladakh, which is almost at 17,500 feet, and it's got one of the most challenging ultra marathons there. It's a 72-kilometer this thing where you run at a 50% oxygen. So yeah, I mean, it's like challenging your limits, pushing the boundaries, and trying to be limitless.
Amazing. That's very inspiring. And for all of you out there, and you're still trying to fathom what he's saying, I think there's a phrase which I read in one of the books. They say there are two lives you lead. One is before a marathon and one is after a marathon. So you have to just do it once to realize what lies on the other side. Thank you so much, Anupam, for starting off this session on this note. Talking about network, talking about landscapes. Let's talk about the investment management landscape, or the investment landscape per se. India has become a very conducive environment on one hand for flourishing of startups and a lot of businesses in general. Since you manage an outfit of this size, I just wanted to get your perspective from your vantage point. How big is the wealth management opportunity in your view, given the rising influence, and at what rate do you think it's likely to grow over the next 5-10 years?
Sure. So, I think I would only say that we are at the right time at the right place, honestly, right? I mean, in 2008, actually, I decided to come back to India. I was overseas at that point of time, again with ICICI only. As you know, I'm spent all my life, professional life here at ICICI. And when I look back, I only am grateful that I took that decision, because the opportunity is so large, right? And if you were to look at the India landscape, and when we talk about wealth, we tend to talk about ultra HNI. Maybe I'll just spend a minute to really lay the canvas, and then maybe we can focus on the higher end of the spectrum. For a country, and we all know it's the most populous country now at whatever 140 odd crore plus, with 90 crore adult population, right? That's the size of the opportunity of people who would need financial literacy at some point of time, who would create wealth in whatever nature and form, and hence there would be a need for money management as a practice to be
correct
of that scale.
Correct.
Now, if I were to look at from a top-down perspective, you have the top 5,000 families, I would say, where we could say that this is generational wealth. So intergenerational wealth, right? From one to the other and so on and so forth. Typically, $50 million and upwards of wealth. Then you have the next set of customers, I would say, which is broadly dollar millionaires. Rough and ready, we will have close to 800,000 such customers.
Correct.
And if you were to go a slightly more mass-af type of a model, which is $100,000 and upwards, so $100,000 to $1 million, you will have another close to 17 million Indians, right? So it is huge by all standards. This top 1.7, the three tiers that I spoke about, would be almost 95% of India's wealth, honestly. 90% plus, close to 12 trillion US dollar on an overall pie of 14 trillion. And in context of that, there definitely are exciting times for players like us, who are professionals in this space, who are trying to create framework for people to make money, manage money. So yeah.
That just gives you a sense of the affluence which is around and the rate at which you're likely to grow. You talked about generational HNIs. I'm sure my colleague Karthik has a few questions in terms of what he normally calls it as vintage HNIs. Karthik?
Yeah, in fact, thank you, Anupam. In fact, that was a great question to segue from. You mentioned 5,000 families, 8 lakh customers, and so on. I'm sure within this, I read somewhere that India is probably one of the few places in the world which is producing millionaires in an extremely fast clip. And new generation or new business millionaires, aside of people who've sold businesses and intergenerational wealth and so on, are emerging. It would be interesting, for us and also for the audience to hear, how you're sort of catering to managing, advising, in simple words, old money versus new money. So basically, I'm sure a lot of the new age billionaires or millionaires, would have necessarily an affinity towards, let's say, tech. And consequently, that spawns its own set of asset classes and so on. So it'd be interesting, how you see behavior, appetite, risk-taking ability, and how you are able to configure, your own advising capabilities towards probably, these two sets of classes of investors.
Sure. So Karthik, maybe I may just want to talk about what are the pools of, clients or new wealth that are getting created, right? So one pool is definitely our entire SME and the MSME space, right? Such a fabulous space to be there, such entrepreneurship, such enterprise, right? Hardworking people, first generation wealth that's getting created. First, at the cusp of moving to the second, really that kind of wealth that's getting created there. The other set is really the entire CXO community in India. I would say CXO or wealth that's got created through ESOPs in the last 20 years, right? As ICICI Direct, we've been pioneers in early 2000 actually, when we set up ICICI Direct, right, which was then disrupted the traditional way of doing offline broking, where we came in as a tech-enabled digital broking company at that point of time, and a whole lot of customers of, say, an Infosys or an L&T would have opened their demat accounts. And fast forward now, 2024, we have privy to the kind of wealth that's got created in this community of professionals. I would say salaried employees were through ESOP, right? A whole lot of wealth that's got created, and serious wealth, right from promoters all the way up to, I would say, middle management, and basis the vintage. The third pool is really the professional set, plethora of doctors that would have come in, all the professionals that are coming in, your architects and so on and so forth. So as India grows, you have all of these pools of money, and now the new set of money that's getting created through the entire startup ecosystem. Right. I would only say that amongst each of them, the folks who've created wealth on their own have a higher capacity to take risk for sure. Right. They are more sure of themselves. They are confident. They feel that they've created the wealth, and hence they can continue to create wealth. And hence they are willing to also, in some sense, they also acknowledge the fact that a lot of their own successes because of the growth in India, and they want to play the India growth story. And hence their ability and willingness to invest into, I would say, capital market, be it listed, unlisted, is far higher than, I would say, the preservation mindset where you're inheriting wealth, I would say. And hence, in some ways, it is nuanced in terms of what kind of offerings do you give, or what kind of acceptability of products, or what kind of products are folks looking at. Our simple philosophy has always been, to create a framework for money management for our clients. Keep it as simple as is possible. And I was just telling somebody yesterday that for customers as well, for our clients, it's that 1% of India that's creating so much of wealth. It's not easy, right? While everybody's looking at that success, but behind that, all the toil that goes behind, the hard work, the sleepless night, dirtying your hand, the zoom in, zoom out that Vikaas just spoke about, and all of those. And likewise for us, the simplified solutions that we bring to our clients has a whole lot of back-end work that goes in. But to the client, it's really a simple interface, a simple engagement, and trying to make money management, boring and classical in that sense. So we continue to prefer asset allocation, and depending on the nuances of what people, but then obviously you have tactical investing style versus the core portfolio. But really, yeah, so that really is the pool, and that's how we kind of look at. One thing is for sure, that if one will have to crack the large India opportunity, and some of the new wealth, or the pockets of new wealth that are getting generated, I think we will all, as an industry, will have to embrace technology in a big way. Absolutely. Because otherwise, because India is just not about those 4 metros, 7 metros, the top 10 cities, the top 15 cities. It is far, far higher. Wealth is getting created in the top 50 cities in India, and really, how do you reach out to them and provide the same advice that you would give to a client in Bombay or any of the large metros is really the challenge that we as participants in the industry are seeing, and those are the ones that we will need to solve.
Perfect. Actually, you touched upon a very, very important point there, Anupam. Because if one sees, almost all of the India fintech story, you have the India stack, and within that there is a whole bunch of, perhaps a large proportion of the startup industry, which is fintech, is about varying forms and types of financial intermediation. Whether it's Zerodha, which revolutionized broking, and of course ICICI came in, much before that as well, as you rightly said. And there are online marketplaces that are fractionalizing even real estate today for retail consumption as an investment model. And then there are marketplaces, like INR bonds and a few others, which are disintermediating the corporate bond space, which is again an emerging, sort of investment avenue. What do you see as some of the emerging trends in the wealth tech space? And perhaps when you talk about that, would you sort of feel that we are influenced more by global trends, or we have an India-focused way or an India customized way, where we are looking at managing both wealth as well as the emergence of new asset classes, which might be part of this whole evolution?
Yeah, so there are two parts to the way I look at the entire wealth tech proposition, I would say. One is on the proposition bit. But before the proposition bit, I may just want to spend a little bit of time in terms of the delivery bit. Because both are important, right? You may have a great product, but really how do you, because eventually India's challenge is the challenge of scale because of the size of the opportunity. So from a engagement perspective, I would only say that really it would lead to a lot of micro segmentation at the first place. Once you've done micro segmentation, it is about hyper personalization, using tech to really give you products or solutions that are suitable to you. And then at the back end, obviously, some of the stuff on the proposition bit. right? And also what I think we believe is that each customer segment will have a different delivery style. So say, for example, folks who are ultra rich, but only want to say, for example, want to operate in the listed equity space are absolutely fine with a tech only model, right? Tech and voice. You really don't need a face-to-face engagement, very, very rarely. While, say, for example, at the other end, a traditional business family, you would need nothing but a strong relationship team, a strong multi-asset family office team to really engage. But when we look at scale and, some of the numbers that Vikaas spoke about, we used to be less than 1 lakh crores of assets 4 years back. And today we are almost 3.5 lakh crores, almost done 3.5 times in 4 years. Our revenue numbers used to be 250 crores. It's now 1,000 plus. Last year we closed. So we've almost grown 4 times. And we've been able to do that is essentially because we embrace tech much before others. Right, our genesis has been that we always had a platform. It's just that we enhanced the platform, and when COVID happened, we saw a shift of business coming into us. Right, it's not that something that we did as individuals. I think we were, as I said, at the right time, at the right place. God was kind. We really had a brand which people wanted to trust. You had a proposition which was solid, and you had a platform which was easy for customers to engage with. From a product perspective, I think there are 3-4 parts to it again. One is, I think active managed funds will continue to do well in India. Given that there is, while there is, a fair bit of information transparency, etc., asymmetry has moved away, but you still have, you look at the listed space itself, right? Outside the 250, you have 2,000 listed firms, companies in India actively traded, right? So the opportunity to play or invest into these companies or into these growth opportunities is humongous, right? And hence you will have PMSs or AIFs who will do bottom-up stock strategies, because finally you create wealth not just on the broader markets, but also about investing into themes or companies that you believe are future leaders, right? Or in the unlisted space, really, where you are doing pre-IPO, say, for example, or growth assets. So that is really the active space where you also have, say, for example, a private credit and, performing credit and so on and so forth. Then you have really the entire passive space. And I would also I will say in some sense, mutual fund in times to come, given how standardized mutual funds are going to become, with low cost product, it will become like your simple core allocation. You're basically playing the market with some themes. So you'll have ETFs there, index funds, and the entire MF, space. And then you would have in between really the smart beta strategies, the quant strategies, and some of those that will come in rule-based investing. And as I think more data-driven we become, I think some of these will have an edge as we move forward. So multiple ways of product categories, and within that you will have nuances of different products and solutions that will come in. And also when you're engaging with investors, and it's been again my learning in the last few years, we always tend to have a very investments heavy bias when we engage with customers. But finally for customers, they're looking at from a full 360-degree perspective. He has an investment need, he has a borrowing need, both in the business side and on the personal side. How do you really solve that? His working capital requirement and so on and so forth, his protection need, and the entire legacy transfer. So really, if you go with a holistic solution, I think there is lots that can be done with clients. But in everything that we do, data and tech will play a key role in terms of personalization and really providing solutions to our clients.
I can testify to that as a 20-year customer of ICICI Bank, almost as long as you have. And I think I'll hand over back to you, Vikaas.
Thank you, Karthik. I'm just wondering whether you've got access to the questions I was going to ask, because this is so interesting. Why this is so interesting, Anupam, is I was just thinking about it. I was actually at the launch of ICICI Direct, I think Mr. Anup Bagchi was presenting. I was sitting in the
Yes.
audience, and at that point of time, we were just thinking, the internet bandwidths at that point of time, and we were just wondering how can anybody, trade. I think this is very futuristic. It will take a long, long time to happen. But here you are, 23 years down the line. You're one of the largest players, and this is what it is. I have two specific questions. One is just building on from where Karthik talked about. You just talked about the way HNIs or ultra HNIs, different slivers of HNIs and ultra HNIs, how they approach the entire business, using technology. But let's flip the side. Let's talk about your RMs. This is a high contact based business, right? You
Yeah,
have to be there in
absolutely.
person rather than virtual. How has technology helped your RMs? You know, I'm not going to use the word uh, insecurity, but typically, if you have technology displacing most of what you do, you tend to get a bit insecure, right? I'm going to be asking a very basic question here. How has it been able to add to your RM strengths when they are meeting clients, when a lot of stuff which they all actually already do is available online? I mean, that is the first part of the question.
So I'll respond, and maybe take a step back as well, Vikas. And I am assuming that there would be a lot of our friends from the relationship team as well in the audience. And it is to them, and I tell it to my team, and I'm going to tell it to everybody here on the call, is that we will all have to change with the changing times. That's point number one. It's easier said than done. When it happens, you really suffer. And you think that why is this happening? And, it's extremely painful. But believe you me, if you do not do that, you would perish. It's not the fastest, it's not the mightiest that survives. It's really the one who adapts, right? Who survives. I mean, since you mentioned about ICICI Direct and you were there in the launch way back in 2000, you see, it's been 24 years for us. There's been ups and downs. But the simple line is that we've changed with the changing times. If we had not, we would have perished long back, right? And I think it is with all organizations. And as professionals, we are all part of that, ecosystem. And hence, it's not only for the relationship team, but for each one of us, including as leaders, to really change with the changing time and to connect the dot, right? Now, to coming to the specific question that you asked, my request to the relationship team would be that, see, we would always be in business because our clients don't have time. Because they are busy doing what they do best, which is the profession or the business and they're creating wealth for themselves.
Correct.
And hence they need a professional to manage it for them. And which is why you and me will always be, in the game. But in what format of game is really what is important. And it is for us to really introspect and ask ourselves. And it is here that I'm saying that embracing tech for each one of us is important. I see resistance, I see apprehension, I see people becoming insecure, as you said. But really, that's the reality. Fees is going to compress. Clients are going to be more demanding. And for you to then succeed, it is but imperative that you will have to play, at a much different level or a higher efficiency level. And for that to happen, you will need to use the ecosystem of an organization. That ecosystem of that organization is, if you keep the client at the center, you have the product proposition on one side and you have the delivery team on the other side, right? That is really an omni-channel method of engaging. Now, for the RM team, it is really, so we basically have, and that's my thinking and that's our thinking as a company as well, that we have a very strong B2C platform. But we also have a strong B2B2C platform, which essentially supports the RM community, which means that I am able to make you more efficient in terms of letting you know what your clients are thinking, what product suitability will happen. And I'm going to nudge you just the way I nudge my B2C customer in terms of what we believe are suitable products for them, lookalike products for them, clients like them who are taking similar product, new stories coming in, new themes coming in, basis their profile and the risk appetite, suitability of the entire asset allocation model. And if they're going haywire to that asset allocation model, I'm going to put a red flag and say, hey, sir, this is what you need to do. the same feed comes into the RM, and it is for the RM to really then kind of work in tandem. Yeah, pick it up from there and really. So we're having another discussion on generative AI and how it's going to really support the B2C model, which is really from an RM team perspective, that we are going to really feed and help the RM work better. We will make him look Superman just because we are going to feed him with a lot of information about both the customer and what seems to be correct for the client.
Interesting. Very interesting.
Yeah.
In fact, on a very different note, I'm just popping this question. I read it somewhere and I've been asking clients about it. I ask clients, what is your biggest fear about technology? It's a very simplistic question. And half the time you expect things like cybersecurity and, this, that. What is the biggest fear? Forgetting passwords. It's as simple as it gets. And, in this day and age, when you have OTPs and when you have, memories which can be stored online, people still worry too much about forgetting passwords. So I think in this day and age, for a client who is also evolving, if this is such a primal fear, we need not worry too much about how technology is going to change things. We just have to make things simpler is a simple thing and just understanding it, right? So that's an interesting perspective I got. But you talked about asset allocation. You talked about different investment avenues. I'd just like to, for the sake of the audience, a lot of people came back to me when I was, when the news came that you're coming on this show. And I've been asked to get your view on different asset classes, or actually different slivers of asset classes like ESG, quant trading, private equity. If you could just throw some light, these are all new avenues which are coming in. I think the AIF industry is taking it up very well. So what's your perspective, A, in terms of these investment avenues per se, and B, what proportion of it should be as part of the HNI portfolio?
So I would only again say that in personal finance, and you can extend it slightly at a more nuanced level to say, hey, listen, at the ultra HNI wealth management as a private banker, the personal bit is more important than the finance bit, which essentially would mean that your ability to know who your client is. And unfortunately today, when you ask people KYC, they only think of an Aadhaar and a passport or whatever. It is about really the deep knowledge, and like Vikaas, the introduction that you gave. I mean, I would say days. I was impressed that the groundwork and the homework that you did to really, and I'm sure, since you did that homework, really you would have spoken to.
That was natural intelligence, not artificial intelligence.
Absolutely, and it is here that. My request always to my team members is that, boss, you should know your clients inside out. If you know their mind, if you know who they are, your ability to offer solutions will become easier.
Absolutely.
Now, the second part is what really are the solutions. And so at the back end, it is really those atoms and molecules, and then you really combine them to create, from the atoms, really the molecules and the particles and so on and so forth. You have equity, you have debt, and you have then gold and other alternate asset class. Within equity, our fundamental belief is that, as I mentioned, listed equity continues to be extremely favored by us because we see both it being extremely transparent, it being extremely liquid, and there is price discovery, and it's a large opportunity. Having said that, as you rightly said, private equity as a space has emerged in a big way, both on the equity side and on the credit side. There are companies who would need credit, say, for example, where banks are not able to give, NBFCs are not able to give, and hence private credit can come in. There are situations where, one can have special situations funds as well. On quant, definitely, we are a strong believer that, because finally, like we all know, data is really playing a big role in all our lives. And with machine learning, we are able to play around with data, and with that, a fair bit of quant models will emerge or are emerging. Or say, for example, the smart beta strategies. Say, for example, at ISEC, we will have multiple smart beta strategies. We may have a momentum quality strategy. It could be, I would say low vol and alpha, Jensen alpha strategy. So depending on various factors, you could create different quant model. As India progresses, I think norms like ESG will only become more prominent and progressive, and hence those themes will emerge. Fresh capital will find favors with companies who follow such norms. So exciting times both on the equity side and on the debt side. Debt, you can play really the entire interest rate cycle, you can play the entire credit cycle, and both short term, long term. Our belief is that interest rates are near peak in India. So if you really want to lock in, and have the appetite to hold on, definitely you should lock in this thing. Otherwise, 3 to 5 year also looks great. Right, on credit, selectively one can definitely to bump up yields, you could do performing credit as well. But from an asset allocation perspective, a little tweak into slightly more equity will also ensure that you're able to kind of have a broad-based method of investing, as I mentioned, the entire asset allocation model.
Sure.
And finally, for all, this entire journey is driven by greed and fear, as we all know. It is for us to really understand our clients well and give them products and solutions in a risk-calibrated manner.
Very interesting. Before I just hand it over to Karthik, I'm just going to sneak in one small question again. As part of a strategy, HNIs and ultra HNIs often use leverage. Okay. What to leverage, how much to leverage. In GIFT City, for example, leverage is going to be a big thing. But keeping that aside, let's talk about leverage in isolation. Okay. What would you like to share with the viewers in terms of experience with leverage? How do HNIs and ultra HNIs use leverage to create wealth or to enhance their wealth?
See, I am honestly,
this is actually also an audience question which has just come in. So I thought,
sure. Sure. So as we all know, leverage is a double-edged sword.
Yes.
If it works in your favor, you make significant returns. In case if it doesn't, it can really pain you for long periods of time. For accredited investors, I would say that, for folks, and especially for family offices who have professionals managing their money, who understand, they can take in a calibrated manner. You really will have to otherwise be cautious in terms of leverage being taken to really make investments. If I were to just explain in a very simplistic term, the single easiest way to understand this is really the entire real estate space. All of us would have taken home loan to take and purchase a house.
Correct.
That is nothing but you've levered to take and to make an investment.
Correct.
In real estate, because you cannot see the volatility like how you see in a market, and hence you're able to ride through the volatility, people tend to take leverage. But if you were to, say, for example, somebody who would have not wanted a house, but would have invested into a house only from an investments perspective by taking a leverage in the last, 7-8 years, barring the last 2 years when property prices have gone up, would have really faced the burden of that leverage. Correct. Because it would have really eaten into your returns.
Correct.
You actually, if you were to look at your interest rate and price not separated, it actually have cut into your, asset price. While, say, for example, there are phases when people may have taken leverage and would have benefited out of it. So I think it is nuanced from that context, and hence one needs to be cautious in terms of making those decisions.
It's a very interesting thing you mentioned. If the asset class is not very volatile, leverage to some extent makes sense. If the asset class is volatile, it could become a double-edged sword. I think that's a very profound thought. And if I may just add to that, I think when it comes to leverage, you should let alternate investment firms take leverage and build your returns rather than trying to take leverage yourself, right? So this is an uninitiated advice to most people who are listening in, just to supplement what you're saying. Karthik, would you like to take over and ask the last few questions, please?
Yeah, so I think the conversation is built up to perhaps two questions that I have. The first is, I think you talked about this a little bit earlier, Anupam, but what typically are the risks or challenges that you face when you deal with high net worths and family offices and so on, and how do you sort of manage that? Is really one of the things I think the audience may also be interested to sort of understand. And simultaneously to that, do you see this is a risk question, the other is probably contrastingly a growth question. You just mentioned greed and fear. Do you see what kind of trends do you see in terms of new sort of asset classes coming in? I think you sort of beautifully described the 4 buckets that typically comprise asset allocations. But within that, do you see anything that is likely to come in a pretty big way that is relevant for HNIs and ultra HNIs, or basically any investors who are capable of putting money into PMS and AIF programs, should be aware of as a trend that is likely to be sort of a decadal trend?
Sure. So when we are building the portfolio for our ultra HNI customers or HNI customers, we tend to stick to the entire asset allocation model. If we deviate from there, which means that the IPS or the knowing the customer and then giving him solution, if we deviate from there, definitely there is risk to it, because it's very important for us to, this business is all about trust. It's about managing expectation, right? And that's really our job. From an investments perspective, really, as I mentioned that I'm a great believer of asset allocation. I think it is seldom spoken about, but if there is alpha that gets created in a portfolio, it is because of the solidness of how you build that portfolio. If you were to look at some of the asset classes, and if I were to quote you, say for example, and because equities is doing well, all-time high, we all tend to get swayed by the equity market, but 2015, 16, 18, I think that was the best performing asset class, right? I think 2020 gold was the best performing asset class. And obviously equities international equities in between have been, this thing, especially US markets, etc. So, one is that when you're building a portfolio, I think the cognizance of the fact that you will need to build it, keeping various asset classes in mind, I think is important. You build a core portfolio and then you build a satellite or a portfolio as well. And one is strategic in nature, which is long term, and then others are tactical. Now, how do you really play tactical, themes? So, say for example, at this point of time, say 1 year to election, we see a lot of government spending in this budget. Government mentioned, I think, 10 lakh crores in infra spend. Rail and road itself is 50% of that, which is 5x to what the government was spending a few years back. With such massive trends, really, right? If manufacturing is a big theme, if defense is a big theme, and all of it getting played out, digitization, formalization, all of those, decadal themes that are there, one will have to build portfolios accordingly. Because in alpha creation, apart from, the way you want to do asset allocation, you would also look at market cap allocation. You're going to do sectoral allocation. And all of those are important because it all creates alpha, right? You may get stuck in a sector that's not performing. Then really, the portfolio may underperform as well. And while you do all of those, I think what is important is, as I mentioned, that you calibrate it with risk and ensure that you're able to kind of solidify it. One of the other thing that as wealth managers we do is to do manager selection, because different managers perform at different points of time. There are different styles that perform at different point of time. Some believe quality at any cost, some believe quality at reasonable cost, some value trap, and so on and so forth, right? We've heard of all of this. We know of stories around it, and how managers have got stuck with their style and have not been able to play the market. It is our job to really then, look at the macro and decipher it and kind of get the right managers suitable for what we believe is the right construct for a client.
Wonderful. I think you also touched upon the obvious question that I had, which is what would you look at considering elections around the corner? So thank you for that. That was one of my questions. If I may sort of slightly nuance my last question, what is it in terms of feedback? And obviously, as a firm, you got a wide sort of array of customers who come from different sort of risk spectrums, if you will. If you were to sort of collect all the feedback you've got, what would be the sort of risk-adjusted return broadly, that somebody should be happy with? I was just curious if you can just touch upon that. I think it's a very tough question. I'm putting you on the spot, but still, if you can just give a very broad range, that'll be very helpful for people to understand whether they should feel happy or sad.
Yeah. So I would only say that you look at inflation, right? You look at first you look at the nominal growth of India, then you add inflation, and then maybe a little bit of outperformance, and a 12 to 15% in an equity type of a portfolio is something that clients should look at from a long-term perspective. But as I mentioned that if you are getting more than, say, government securities, right, there is that element of risk which people need to be cognizant of, right? And till you are able to let people know that, hey, listen, if you are trying to create that incremental alpha, how best you can do, and which is when then you put in non-correlated asset classes, etc., so that you are able to give similar kind of returns, in a more calibrated manner. The other thing is also, and it's again a very fundamental belief that I have, is that clients create wealth through concentration of risk. And it is our job as wealth managers is to preserve that by diversification of that risk, right? So when I say concentration of risk, essentially it could mean is that either it is ESOP, so single stock, ICICI Bank ESOP for so many years, that's really the pool of wealth that's got created, or for an Infosys, or for an L&T, or for an HDFC, or for any this thing, or for a promoter, his promoter holding, right? Because you believe so much into that, into the work that you do, you don't see it as risk. But as financial professionals, obviously it is all single stock, single sector risk that you're taking. And once we engage with customers, our job is really to show them that, and really then build a more broad-based asset allocate model of investing.
Thank you, Anupam. Appreciate that.
In fact, I think I didn't even realize how fast time has passed. So instead of asking the next few set of questions, I'm just going to straight away dive into the audience questions. Some few questions have come in. Anuj,
Sure.
I think we already covered leverage in terms of HNI, ultra HNI investments. Evolution of the GIFT City route, I think, is a topic in itself, and maybe it's a good idea to actually do a separate session on that. Veeramani Rajsekharan asks,
if I can, Vikaas, just on the GIFT City,
please.
So I think two other segments that, say, for example, we like a lot. One is definitely the NRI segment. And for NRIs, because as India is becoming a hotspot for investments, I would say, and the Indian diaspora is becoming stronger and stronger. They feel that, and with their connect to India, they feel that this is where we would want to invest. And in that context, and I myself was an NRI at some point of time, you have two pockets of money. You have the rupee money and you have the dollar money. Dollar means your foreign currency money. And invariably, folks there would want to keep the money in their district. So in that context, if you want to keep the money in NRI and still in dollar and still would want to, I think GIFT City allows you to, as a booking center for you to get that money. And the other bit is really, and I think credit to the government, the entire regulatory setup, single window of approvals, the IFSC authority, global standards, some tax, benefits, etc. So I see that. I think it in itself will see a lot of action there, and many solutions, many firms will set up offices there, and really that would, kind of be a smart way of doing it. For the ultra HNI, anyways, I think the 10 million plus route of taking money outside for customers who are keen, right, and still not be stuck with the LRS route, I think is extremely favorable there. and that is gaining a lot of traction as well.
Wonderful.
So both money for LRS money to be taken out and for this dollar investments. Yeah.
That's very interesting. I think since you mentioned dollar, I think Veeramani Rajshekharan is talking about, he's asking, can de-dollarization affect future wealth generation? Could you give us some insights?
See, dollar is going to stay here for some time. I think at least for the near future is what I would say. All attempts on various other initiatives, including rupee being accepted elsewhere, etc., or the entire narrative on de-dollarization. But I think US continues to be extremely strong, world power, and dollar will continue to, be a strong currency. So from that context, we continue to believe that while the world order will change, but it's a slightly more long-term in nature. But from a context of investments, definitely India looks very good as an investment destination. I really don't want to now get into another discussion on the US market and the Chinese market because it's another subject topic, but we can cover it at maybe at a later time.
So they say that two of the countries which think that the universe revolves around them, one is America and one is India. We think that this is the center of the universe. So I'm not surprised with this question. And in fact, I think it's playing on a lot of people's minds. I think that was a fairly nuanced answer you gave. But which again brings me to the point that we probably need to do a session on Gift City. Veeramani Rajshekharan also had a very interesting question. He's talking about protecting customers' assets. How are we going to tackle technology hazards such as phishing, SIM switch fraud, and so on? Would you like to throw some light, or would you want to? I mean, just very quickly.
Sure. No, of course. So I think if you were to ask us what gives us sleepless night these days, it is really about all of those, and folks who are more on the tech side like us, so right from data privacy to cybersecurity. I mean, we've had cases now, again, I would not want to take names, but where firms have, those ransom calls and hacks and all of those, and data getting stolen, and then this thing. So really, I think one would need to create guardrails around it, and which is why I think it is also important to work with trusted brand, because that there are efforts being put to really safeguard. I think from our context, given that as ISEC, we are also, the parent is the bank, and with RBI being there, I think the guardrails are even more stricter in terms of the norms for ICICI Direct, the trading platform, and so on and so forth. So but lots needs to be done, and I think it's an ongoing thing in terms of learning and kind of creating guardrails for ourselves.
From a very different perspective, suddenly forgetting your password doesn't seem that much out of the ordinary, right? The moment you generate a new password, that means you're constantly keeping tabs on what's happening in your account.
I mean, for all of us now, we moved into Face IDs and all of those, and with OTP. I think one credit we will have to give to our regulators in terms of their being so progressive and really pushing the entire ecosystem to do much more and at a faster clip, and to change with the changing times. So credit there to our regulators.
I completely agree, and I think our value proposition to the world now is low cost digital solutions. So more power to that. The last question, which has been asked by ASFS Wealth Management, advisory versus commission with stroke brokerage based advice, which is better for 2B HNIs who are coming into their own being, who probably run into money for the first time? Whom should they go for? Somebody who's giving an advisory piece, or somebody who's basically a distributor stroke commission driven guy? This is by a wealth management firm, by the way.
Sure. No, absolutely. and I think it's a great question. I would only say that as we progress, this business is all about trust, which essentially would mean that you will have to be more transparent. You will have to remove conflict of interest. and we will basically be, honest to our clients in terms of our dealings with them. Now, in context of that, whatever works is what we will need to do, which essentially would mean that if you believe that advisory is the way forward, because it is transparent, you're on the side of the client pays, and the fees got disclosed, that could be the model. Even in a distribution model today, if you're able to do better disclosures, you can be transparent with your clients what you're earning, right? And you can still demonstrate that you're adding value. Because for us to be in the game, in the value chain between the customer and the product solution, it is nothing but either ease of execution or advice and a combination thereof. So if you're able to add value, I think I see no reason why clients wouldn't want to pay. So really, to my mind, the answer is not simple. The simplest is, advice is the way forward. But I think both models can continue to work, but in a slightly more different avatar than where it is today, where you will have to disclose your pricing, be transparent to your clients, and remove the conflict of interest. And if you do that, I think we see no reason why clients wouldn't want to do business with us.
That's a wonderful, wonderful answer. In fact, I think you touched upon the word value. I think it all boils down to cost versus value. I have an advisor myself, okay, and one would want to think that basically being in the center of information, why do I need an advisor? I actually have an advisor and I pay him a fee simply because I see value in it. So at times, I think it all boils down to that. And I think in the initial stages of the conversation, you did mention about comfort being more important than conviction. So if you're comfortable with your advisor and he's creating wealth for you, or at least preserving your wealth, by all means, I think this is a very good question. And I think your answer was very nuanced. We have a lot more questions coming in, but unfortunately, I think we've run out of time. So Anupam, would you want to give, what do you think? There are two questions which vying for the best question here. We are giving a prize away for the best question here. I like this question on de-dollarization. It actually pushed you a bit in terms of what to answer. I could see that. And the other one was this advisory versus commission, ASFS wealth management. Whom do you think should win the prize for the best question?
I think both deserve the prize. If you can, I think I would encourage you to.
Your wish is a command, sir. Both of you will get a prize. Please do be in touch with the PMS Bazaar team. And on that note, thank you so much, Anupam. It was a pleasure having you. I think what struck me in this entire 1 hour was the simplicity of conversation which you had. You were not trying to make things sound very exciting. At one point of time, I think I heard the word asset allocation 4 or 5 times in a particular answer, which ultimately means you may be in an exciting business, but what works is simple, plain, boring stuff. And that has been the reason for the longevity of your company, of your group as well. So thank you so much, Anupam, for being here. Thank you, Karthik, for being a gracious host and allowing me to speak for so long. Thank you so much. And thank you for the audience for being so patient. Thanks a lot.
Thank you.
And thank you so much thank you so much for having me on the show. Thank you. Really enjoyed the talk. Yeah. Thanks, Vikaas. Thanks, Karthik.